Hey everyone, welcome to the midweek training. This is Sophia Melonē, the Debt Demolisher, and welcome to the Sophia Melonē Show, where we make debt freedom the new norm and wealth building the natural nature of habit. Did you know that you have the opportunity to leverage free tools that are literally at your fingertips, all for the betterment of your tax positioning? This week, I'm going to show you an amazing tool that you can begin to use to not only project your tax liability for the next current year, but to also figure out how you can retain most of your income throughout the year so that you're not getting a huge refund and allowing the IRS to earn interest on your money. So let's get ready to tune in to this week's episode of the Sophia Melonē Show, where I'm going to tell you some tips, some tricks, and some aspects that will position you for a great tax year. Let's get started. Hey. All right, everyone. How are you? I am Sophia Melonē, the Debt Demolisher, and I am here to deliver the midweek training to get you one step closer to your financial success. As again, I am Sophia Melonē, and I am the founder of Smash Debt Inc., which is a financial education company that provides financial leadership coaching, credit coaching, workshop facilitation, and foundational training and support for small business financials. And this is all done in efforts to create debt eliminators and wealth sustainers. So welcome to the room. So since we're going to be talking about how to leverage IRS tools that can serve to your advantage for your tax preparation purposes, I'm going to share with you a few things that you can do to position yourself for better tax positioning next year when you file. So I want to go into my disclaimer and show my slides with you guys, because I want you to know how important it is to leverage what you have at your fingertips. Let me put this up for you so you all can see. Okay, here we go. Show on stream. Turn off my camera so y'all can just see my camera. Okay, so before we get started, since we're talking taxes, since we're talking estimates, since we're talking things that may be considered as financial advice, I'm going to share my disclaimer to let you know that this is not any official financial advice that I am sharing in a professional setting. So let me share my disclaimer before we get started. And I want to let you know that as a certified financial education instructor, I serve in a capacity to teach, advocate for financial literacy. Therefore, all information that's shared via the Sophia Melonē, the Debt Demolisher, or Smash Debt platforms are for informational and educational purposes only, and not for the purposes of providing professional accounting, tax, and or financial advice. So neither Sophia Melonē, myself, or my company, Smash Debt, shall be held liable as a result of any inaccuracies or outdated information that is shared via the respective platforms. So therefore, any and all information that you receive during this training today should be independently vetted and verified before it is relied upon. And you can do that through whomever your tax advisor is, whomever you have as your designated person to handle your tax preparation. I am not serving as your tax preparer on today. Let me make that disclaimer, let that be known. I'm just here to show you some tools that you can use to leverage for your advantage for tax preparation purposes. Okay. So let me tell you what I want you guys to do. So what I want to walk you through is the IRS's tax withholding tool. They actually revamped their tool. They just released it, I want to say a few days ago, because prior to the changes with the tax laws that you can see here on the screen, where they're talking about the Tax Cuts and Jobs Act, this is the law that went into place that made a lot of changes to tax preparation, not only tax preparation, but tax exemptions more specifically. And so one of the things that I've noticed with people who filed their returns last year, they were like, why isn't my refund isn't as high as it used to be? Why is it, why am I getting less? And I had to explain to them why the changes occurred, because the IRS no longer allows you to get a certain dollar amount for every exemption that you have. So let me just clarify this really quickly. So in the past, the IRS allowed a certain number, a certain deduction amount for every dependent that you claimed on your tax return. So for example, if I claim myself, I would get an exemption allowance of like $3,500. I'm just going to say $3,500. And so for every exemption that you have, every dependent that you have, you would get this exclusion amount per dependent. So if you had 3 children and you have yourself, that's 4 dependents right there. So if you take that 4 dependents and you multiply that by the 3,500. So if you take that and multiply by the 3,500, that's $14,000 in reduced or like in a reduction to your tax liability that you could be able to claim. But because they've eliminated that, so they've eliminated the fact that you can get an exemption allowance for every dependent that you have, and they've capped it off where you only get like the tax credit, or you get a dependent credit, which is like $500, and then the child care credit is like $2,000 or something like that. And so now what they've done to supplement that is raise the standard deduction, and they did that to, I guess, quote unquote, kind of offset the exemptions that they were taking away. And so although the standard deduction went really, really high, those exemptions can really add up to a lot if you have a whole lot of kids. If you have a whole lot of dependents, that can be a whole lot of money. So you were able to get that in addition to the deduction, the standard deduction, which was a lot lower than what it is now. I think it's like $18,000 now. And that allowed you to get more back. And so what I want to explain to folks is that you have to pay attention to your withholdings at this point, because the exemptions have gone away. And so what the IRS did was they developed a new tool on their website to help taxpayers like you and I to better estimate our tax withholding in terms of what should be withheld from our paychecks on a recurring basis, in order to have enough withheld by the ending of the year so that we won't have to have a tax liability, or in some cases that we won't have to get a really, really, really huge refund if you're not getting like some sort of refundable credit. So that's pretty much the gist that I'm going to share with that. I'm not going to go into too much further details. Consult with your tax advisor, but I just want to share with you the tool. Let me go back for 1 second. So what you can do to get to the tool that the IRS developed is going to irs.gov, individuals, employees, tax withholding. I have the link up here that you can see. If you go to that website, or you could just simply Google IRS tax withholding estimator, boom, it'll take you right to the link. But I do want to share this caveat that you have to make sure that you are using the IRS's tool, because if you use Google and put in that information, there could be other websites or applications that are out there that are not an official government site that will do these estimations for you. But I like to go the legitimate way, and I just want to use what the IRS put out there. I'm not using nobody else's stuff. So I'm using what my taxpayer dollars has already paid for, which is this estimator tool. So I want you guys to do the same thing. So whenever you Google it, make sure you are looking at the irs.gov is in the URL. So make sure that that is present. Okay, so now once you go there, you'll scroll down and you'll say, I want to use the tax withholding estimator. You'll click on that. Let me take this off the screen because you guys can't see this. Take that off for a second. Okay, so if you just click on use the tax withholding estimator, it will take you to the next page, and this next page will give you all of the information that you must have in front of you in order to properly use this tool. So what you have to make sure that you do before you even begin is to get your most recent pay stub. So you should have already received a paycheck for 2020. We are in 2020 now. So you should have received your first paycheck so far. And what you want to do is pull that and have that in front of you. And then you also want to make sure that you gather your tax return. So the last tax return that you actually filed. So if you haven't filed for 2019 yet, then you need to pull out your 2020. I'm sorry, you need to pull out your 2018 tax return just so you can have that in front of you, because it's going to have a lot of information on there in terms of your filing statuses and things of that nature. But if you already filed for 2019 taxes, then you need to have that in front of you as well. So you also want to make sure that you're gathering all of your other sources of income that you may have. And that could be 1099 income, any type of 1099 income. That could be business income. That could be business. Actually, the business losses, I wasn't able to put that in when I tried to do mine. But I may have to play with it again just to see how to incorporate like any expected or potential losses that you may have, like if you're just starting out your business. But just thinking of all of your income sources that you could potentially have, having all of those documents in front of you. And then once you have that in front of you, then you can move forward with going into this tool and using it. So I'm going to show you what it looks like and what it does. So once you scroll down to the bottom of the page, again, this is talking about the recent changes in the tax laws. So it's important for you to look at this, read this. Some folks may itemize, and most of the time, people who itemize their deductions are folks who pay tithes or give offerings to charitable contributions, folks who have mortgages or rental property where they're paying mortgage interest or real estate taxes. Or any type of property taxes. Also, anyone who is paying state and local taxes for their withholding. So it's a lot of things that you can include when you itemize. So it just depends on what will be most advantageous to you. So if all of the deductions that you have don't exceed the $18,000 standard deduction, then you might as well just take the $18,000 standard deduction. But on the other hand, if your itemized deductions exceed that, then you want to make sure that you are itemizing. But they did make some changes with the itemizing, meaning that they've capped off the amount of taxes that you can pay. So your tax cap, I think, is no more than $10,000, period. So if you've paid if you pay income taxes to your state and local office, if you pay real estate taxes to your local government, if you pay property taxes to your local government, that amount that you itemize cannot exceed $10,000. That's the cap. So if you've paid property taxes or any type of income taxes in excess of $10,000, you're not going to be able to deduct it. And also what they change is the amount of mortgage insurance premiums that can be deducted. So you have to really pay attention to these things if you are a homeowner, if you have mortgage insurance and things of that nature, because they did change a lot of the laws regarding that. And again, consult with your tax preparer, your tax provider. This is not official tax advice. So if you click on use the estimator tool, it will take you to the actual tool. So the tool will prompt you, and again, it says to use your best estimates for the year ahead to determine how to complete your W-4. So the W-4 is it was the employer's withholding certificate, and that allows you to tell them, okay, this is how much I want you to take out of my paycheck, so that you can give it to the IRS so that they can account that as my withholding for the year. And what we want to do is we want to make sure that we're breaking even at this point. We don't want to give more than we have to, but the caveat is we have to know what we are going to do with the money that we are not giving to the IRS. Because what I've learned is a lot of times people have a tendency to spend all of what they have from their paychecks, as opposed to leveraging it and using it for wealth building activities. And so I want to challenge you that when you go through this process, think about how you are going to utilize the income that you are now going to be able to get into your account as a result of adjusting your withholdings, because you want to earn the interest on your money and not the IRS. Because what you have to understand is the IRS is a custodian, right? It is a custodian of taxpayer dollars. And what great stewards and what great custodians do, they invest. So you better believe that the money that your employer is taking out of your paycheck to send to the IRS on a monthly basis, because they do have to submit their withholdings monthly, you better believe that the IRS is investing on that money. So they're earning interest on the money that's being withheld from your paycheck and being turned over to them, and they're putting it in an account that's going to bear interest for them. But what are you doing on your side is what I want you to really focus on, because you want to be a good custodian over your resources. So you have to make sure that you are investing your coins and not spending all of your coins. Can I get an amen, somebody? Okay, back to the tax withholding estimator. So when you get to the tool, there's going to be 6 steps that you will have to go through. And what it's going to do is going to ask you a lot of questions about your tax history, which is why I said you have to have your most recent tax return in front of you, just so you can have that reference. You also have to have your most recent pay stub in front of you, because based on the numbers that's on that pay stub, the tool is going to do the projection for you based on what you put in. So you have to make sure that you have that information in front of you so you can have the most accurate data to be able to use inside of this tool. So the first step is they're going to ask you a lot of questions about you. They're going to ask you your filing status. So you have to determine whether or not, if you plan to file single, married filing jointly, married filing separately as the head of household, or if you are a widower. So you choose your appropriate tax filing status based on what you plan to file as in 2020, well, in 2021. Right? Because we're in tax year 2020 right now, which means you won't file for this year until 2021. So what we're doing now is trying to project how much money needs to be withheld from your paycheck. So when you file your taxes at the beginning of next year, you're going to have enough to cover the tax liability that you owe. So what I want you to do is go through this information, follow the prompts, enter your filing status. And as you enter your filing status, more information is going to populate down here, and it's just going to continue to expand until you've completed sections 2, 3, 4, and 5. And so all of this information will come from, and it's very clear, you guys. So it's not hard. It's very clear. It will ask you specific questions, and all you have to do is look at your pay stub, put in the number, look at your tax return, put in the number. And you have to make sure that you're putting in the whole numbers and not decimal places, because the system won't take it. Your estimate will be really off if you try to put in that, because it's gonna ignore the decimal point and treat it like millions. Because I actually did that, and I was like, whoa, that ain't right. And then I realized I didn't put the whole numbers in. So make sure that you check that before you proceed. Okay, so now once you've selected that, as I explained, it's going to prompt you to continue to move through all of the sections of the form. Make sure that you complete each applicable section and follow the prompts. It's very easy to do. Once you've gone through all 5 parts, it will take you to your results. And one thing that I love about this is that it allows you to print the entire report. So it will allow you to download all of the information that you have populated here, and then also include what your results is. So what this estimator did was it took all of the information that I put into these sections, and as you can see, these are now checked off now because it's been completed. And now it's issuing the results. And the results that it's telling me is, if I do not change my withholding, like the way that I have it set up right now for 2020, if I don't change it, I will still likely get a refund of $1,300. Okay, so that's not bad. That's pretty good, because what I want to do is I want to minimize my refund I want to be able to get to a point where I can break even, because like I said to you before, that you want to be able to earn the interest on your money and not the government. Because if you are overpaying, what did I tell y'all? The governments are stewards, and they're going to invest that money, and they're going to be earning interest, and you are going to be earning zero. So what I need you to do is make sure that you adjust this to a point where your tax liability and your refund will be zero, so that you're able to maximize your dollars for your advantage, for you. And you can invest it, and you can earn the interest, and you can use those dollars to generate wealth for you long term. So this is the report, and what it will allow you to do is to say, hey, if you don't like this number, which I don't, because technically I want this to be zero, I can adjust it. And so what it's telling me to do is, if I'm not happy with my results, what can I do to get this estimate or get this projection to where I want it to be? So they have this slider here that will allow you to move the dial to where you want it to be. So right now it's telling me that based on the information that I put in, I'm going to get a $1,300 refund when I file my taxes for the tax year 2020 and 2021. So I want this to change. So what I'm going to do is I roll the dial down to say, okay, if I want zero tax liability at the ending, when it's time for me to file my taxes, what do I need to adjust it to? And so when you move this dial down, it will populate new results for you to tell you what you need to adjust your withholding to be. So it will tell you what your projected wages are. Of course, I black that out because y'all need to know all my business. And then you will click this radio dial to expand to see, okay, what is it prompting you or telling you that you need to do? And so once you hit that expansion button, it will tell you, okay, what you need to do is you need to put in this dollar amount in the W-4 form. So remember, I was telling you guys that the W-4 form is the employer's withholding certificate allowance, which is what your employer uses to determine how much they withhold from your paycheck, so that they can then turn it over to the IRS as part of their monthly submission. Because your employer is just a pass-through for you, because the government doesn't trust you to give you all your money and you pay your taxes later. Y'all know y'all ain't gonna pay your taxes if the government gave you all of your money up front, because we have a tendency to spend all of our money, like I said. And so what they're doing is they're saying, nope, let me take this off the top. And if you overpay, we'll give you your money back without giving you no interest. And if you underpay, then you're going to owe us money, and you're going to have to pay us interest on the money that you didn't pay. Y'all see how that worked? Do y'all see how that worked? I hope y'all caught that gem. That was a juicy gem. Juicy gem right there. Okay, so what this is telling me to do is, if I want to have a zero tax liability, then I need to update my W-4 form to put in this dollar amount. So remember, I was explaining to you guys that the process has changed. So in the past, it used to be exemptions. You used to be able to put your exemptions at 0 or 8 or these crazy high numbers, and they would take out very little taxes from your paycheck. But then at the ending of the year, sometimes folks would end up owing. That would just screw you over. But because they've eliminated the exemption number altogether, the tool, and I don't know the algorithm that's used to come up with this number, but this is their projection, and I'm going to test it out to see. Because again, this is a new tool, you guys. So if I wanted to get this to change it to 0, I would update my W-4 to enter this dollar amount in the form. And what I love about the tool as well is that you could just click on this and it will pre-fill the form for you with the amount that they are suggesting that you need to enter in order to make the changes based on the results that you desire. So if you go down and you click on that button, it will give you the pre-populated form with the amount already in there. And then all you would have to do is put in your information, your name, your first name, last name, social security number, your address. You would check the applicable box, and then this is already filled in, so there's nothing else you have to do. And then all you have to do is just go down here and sign and date, and then you turn it into your employer, and then they'll process it. And then by the next time you get a paycheck, you should see the difference or the change in terms of whatever the withholding will be. Okay, so I hope y'all caught that. All right. And so let's say if I'm being a little bit too what is the word I'm looking for? If I'm being a little bit too reliant on this tool, right? Because I could essentially use the number that they gave me if I said that I wanted my tax liability to be 0. But like I was just saying earlier, I don't know the algorithms that they've used to create these estimates. So I want to err on the side of caution and include a buffer. So instead of me projecting to get a refund of $1,300 back, I was saying, let me say about $250, right? So if I wanted to say I want a refund of about $250, what would those numbers look like? And again, I adjusted the radio dial to $250, and then it automatically populated what the change would be. And again, this is a refund for approximately $250. So if I were to use that, it's telling me this is the amount that I need to include in my withholding form, which is the W-4 form. And again, if I wanted to download the pre-populated form, I'll just click here, and then it will give me the number that the estimator spat out, which is here, you see on the screen. So you guys, this is an amazing tool. And I just want to show you why it is so important to do this, because at the end of the day, we have to take control over our finances, and we have to take control over all of the tools that are available to us. And I want to remind you, if you are new to the channel, make sure that you subscribe, hit the like button, share this out if you found value in this, because there's a lot of people who don't know this, and they don't realize that there are tools that they've already paid for through their tax dollars that they can use to their advantage. And the tools are out there. And that's one of the things that I plan to do, is to continue to share what is available to you, because a lot of people don't know. And that's my responsibility as an educator. That's my responsibility to do that. All right. So make sure that you subscribe. And it's time for me to share with you the homework. Okay. It's been real. I got to go. Thank you for tuning in. I'll see y'all next week for the next midweek training. And again, don't forget to subscribe, share this out, and let me know the value that you found in today's training. See y'all next week. Mwah!